Good morning, everyone. Good morning, good morning. Welcome to the 8th of July, Tuesday. I'm JJ, and this is the Trading Syndicate.org. How's everybody this morning? Well, let's go take a look and see what mischief we've gotten up to here in the night session. So we finally had some liquidation yesterday, and the market basically, for longer term traders, this is what's going on. If you're using the levels, my levels, we did what we call a look above and fail of 6306, which is a big level for me. Now, for larger traders who shorted that move and shorted 6300, let's say, what you're looking for tonight is a little tough on you because it's eating into your profits. But as long as the market stays underneath 6306 going into RTH, right, you're okay because we'll likely see more downside. What's going on tonight, this is normal market action. After a liquidation in RTH, that inventory is taken in by wholesalers and larger traders. It is disposed of during the night session. Think of it like these are stale donuts and we're getting rid of them at 3 o'clock in the morning to drunk people coming out of the nightclub, right? So that's what's going on. That's normal market action. If a market goes up, nighttime is a nice time to try and buy some cheap inventory for the shorts. If people get trapped short, they get to cover. If the market sells off, that inventory taken in is usually taken and disposed of during the nighttime session at higher price. That's what the night markets are for. Everybody talks about Japanese open and this open and all that stuff, but that's kind of missing the point. The point of this market is inventory, right? And large traders and dealers, right, market makers, they have to take in inventory when the market falls, right? They're not traders, they're liquidity providers, right? So it's a different business. So they provide liquidity, they take in positions, and it's nice to get rid of those positions at night and turn your inventory into cash, right? That's why it's called a market, right? Everybody forgets that it's a market. So you take your inventory and you turn it into cash. So the night market's working quite nicely. It's working as it should. You see, the overnight low, nowhere near the low of yesterday. And I'll point out yesterday's low is what we call a poor low. A poor low, right, means that there's buying competition there. Notice that the overnight market did not get anywhere near yesterday's low. Overnight inventory is long, right? I did a test short at around 62, I think it was 62.80, and I scratched it. So the bid is still in. I was looking for a little bit of an inventory correction. I'll show you the trade I took in a second. There's a sort of more detailed look. But we're not done distributing yet, so the shorts, I took the short here. I took it when it did a look above and fail of 82. I shorted 80, and then I immediately got stopped out because we're not quite done selling off yet. I was a little, once again, like yesterday, I was early, right? I went and shorted it here, got stopped out, and then it worked. But when it worked, I was making coffee and I missed the trade. So that's trading. Sometimes you miss a trade. That's not the end of the world, right? But I was too early shorting it here, and that's where I got stopped out. So that's my take so far. We're waiting for an inventory correction lower. We're in distribution right now, right? Yesterday's inventory is here. We are selling it up here for profit, right? The difference in price between here and here is profit. Okay. When we run out of buyers, we're going to have to put it on sale and bring it back down, and that's when I'm looking for the short. So right now, nothing yet. So this is how you wait for your trade. I always test short using the micro, and if it works, great. If it doesn't work, like it didn't work this morning, well, I'm early, right? So being early just sometimes doesn't work. Now let's see if we can take that K low and move it a little lower. And welcome to the folks joining us on YouTube. So this is not an A plus setup, but if I'm scalping as the market comes up here now, I'm looking for sellers, say 82 to 83. If I see them, I might take a short, and if I did, my risk would be just here. The picture perfect trade is a look above and fail of 85 and a half. That's the extension at the edge, which I'd be looking for. But right now we seem to be topping out somewhere around the 84 level. Let's see. If you are short, right, you have sellers here at 83, 82. If we lose those sellers, that's kind of like your warning light, right? The market will give you signs that your trade's not working. You got to pay attention to those signs, okay? Yeah, well, it's obvious quite a few traders shorted the low, like Raj. Open interest for futures. I think it's on the CME website. I don't use it, Charlie, myself. Hey, John. Yeah, it's a little better tonight. I don't use open interest and commitment of traders because I'm a scalper. I trade in the daytime frame, and I don't really get any information from that I can actually use in a trade setup. If you're new to the channel, you'll see that my trading is very, very simple. I identify where there's a seller and I'll sell next to them. In the old days, we used to call that selling alongside. So, say if Charlie was sitting next to me on a trade desk and he got a sell order from a client to sell 2 million shares of stock. I know he's going to knock the stock down. So I'd lean over and go, "Hey pal, can I sell alongside? Can I sell maybe 5, 10,000 shares next to you?" Which means can I short it because I know that you're going to sell 2 million shares and knock the price down. So that's what I do in retail trading is I look for a seller or when sellers compete and then I'll sell alongside. Now, when those sellers move their offers higher, which means that they've identified buyers, then I cover my short or I scratch my short. So right now I've identified that there's sellers at 83 and under, right? So if I'm shorting here at 82 and a quarter, 82 half, then my risk is really at the top there. If those sellers disappear, then that trade doesn't make sense anymore, right? The only reason I'd be short here is if sellers are competing and pushing price down. If sellers don't have to compete, right? They're competing to capture the buying, right? If the offer is moving up like that, now it's telling me, uh-oh, maybe this short isn't such a great idea, right? And my risk is 82 and a quarter, 83 and a quarter, 83 half. Because there's no sense me being short 82 and a half if it's trading at 85. Does that make sense? And that way the short doesn't get away from me, right? If they don't have to sell the market under 84, why would I short it? See, there's got to be a business reason for the trade. If there's no business reason for the trade, why would you put money at risk in something that doesn't make sense? But retail traders don't think about it that way because they're trained to trade on indicators and moving averages, which is okay. But wouldn't it be nice to know why a trade works and why it doesn't work, other than some random excuse? And that's what I teach every day. See? So I'm gone, right? I was short 82 and a half. As soon as it started getting to 83, 83 and a quarter, scratch, right? There's a poor high there, the market profile shows. So if that poor high gets taken, it'll create a stop run and the market might go to 85, 86 with a big green candle. Do I want to endure that pain? Folks understand how my reasoning behind this? I know it's early, right? But there's a reason and a business reason behind the trade. And I think it's essential for short sellers to understand the reason why they're shorting a market. Things like overvalued, overbought, all of that stuff is all BS. It's meaningless, right? The only reason to short a market is if you've identified that the market's being put on sale. If the market's not being put on sale, why are you shorting it? Oh, geez, there's you are, Mike. I was wondering where you are. We were talking about you yesterday. I thought you got that job in New York and you You were not allowed to be in the room anymore. I take it you didn't take the job in the city. No? Oh, that's too bad. Mike is our resident quant. Yeah. Well, enjoy your summer in Oregon. I bet you're back on the street probably by September. Hey, Jaejun, how you doing? Hey, Dan. See, it's tempting to stay short here because the TPO is showing a poor high, where sellers are competing. But the candle chart, unless we get under 82 and a quarter again, is not giving me a lot of confidence in a short. I don't see a setup for a long here because I don't know where I'd put my stop. The only reason I'm thinking short is because overnight inventory is long and we're looking for some sort of a correction. Now, here's another thing about shorting markets. Shorting a slow market where the price action is slow is difficult because the distribution of product is slower and it takes time to run out of buyers. Sounds weird, but it's true. Slow markets will distribute until they are forced to lower price. So what does that mean? Well, and this is hard for people to visualize. If you have two buyers coming in every minute, that's better than nothing. So the market will will sell at these higher prices. Even though the business is slow, the longer you hold a market in a straight, flat range, the more buyers you will attract because that gives people confidence, right? The longer a market is held up, the more buyers are attracted. Just like a nightclub with a lineup. People see a lineup, they go stand in line. All you got to do is show a little price stability. And as we were talking about yesterday with our friend Anne Marie, we were talking about how annoying this market is to short. It really is. It will test your will like you wouldn't believe trying to short this thing. And sometimes there's just no trade. Like right now, I don't see a long trade. And because the price action is so slow, I can't really see the short just yet. If you are in a short, I'd say I'd put my stop. If you're feeling kind of like generous and you want to spend some money, stop at 85, right? Um, if you're not comfortable using that big a stop on an 83, 82 short, just leave it alone. See how small the candles are getting on the 1 minute chart? That's a really good indication of how slow business is. You know, when you have these really tiny candles like this, it's really slow business. So that'll tell you if you don't have time in sales, right? Here's your time in sales. And you can see it trades and then it stops. See, it's completely stopped trading. There it trades and then it stops. There's not a lot of flow, right? The time in sales is telling you the amount of transactions, how fast those transactions are occurring, right? You want this to be just moving all the time. So we've got 6 minutes until what we call the London Open. And London likes to usually go a little lower and liquidate, grab some cheap inventory. If that fails to happen, we'll take out that poor high and run some stops. And the next set of stops structurally is 91.5, which is quite a ways away. John, every time you check in, it just slows down, eh? It's crazy. Do we have any news today? Not really. Anybody have any questions? What was the hot stock of the day yesterday? Look at that. MBIO. $3 stock traded $1.2 billion worth of stock yesterday. How beautiful is that? Jeez. And we're still stuck. Now that is a double top, which is a poor high. Sellers are still there. Exactly, Howard. You hit the nail on the head right there. Right. It's another one of those pre-market pumps where they take the stock up. Yeah, the stock was what? $1 the day before. They start moving it up in the pre-market. By the time the market opens at 9:30, it's at $3. They gap it all the way up to 6 and then just sell it all the way down. I'll do an analysis on this one too. I'll show you why it'll never get back up over $4. Right? They did the same thing last week with that Mogo. And if you look at my charts on that, you'll see why it'll never get back up over $3 again. They're just, wow, unbelievable. Well done. Good criminals. There we go. And now, you see how we're just creeping higher, tick by tick? How do I manage to wake up so early and work long hours? Well, I'm in the UK, so it's 8 o'clock in the morning here. Hey, Johnny, how you doing? I've always been, I don't know, my whole career working in the industry, I really rarely got more than 3 hours of sleep, especially when we were working German deals. Like we had companies listed in the U.S. and Germany, so I'd have to wake up early and manage the trading in Germany and then manage the trading in the U.S. as the U.S. markets opened and that sort of thing. So it's just something I'm used to, I guess. From like 1996 till 2012, I don't think I slept more than 4 hours a night. So here comes London. Oh gosh, let's get some order flow, London. So there are some sellers up here. We try a little short. Right? Just short right at 83 and a quarter. And let's see if it can get down. Now, if the offer starts lifting over where that white line is, right, then I'll scratch it. And now I need those sellers to come down here, right? That's what I need. I've got an 80 and 3/4 bid in. Jeez. And once again, this is just a test short using the micro to see if there is any selling competition. Well, you see, I wasn't trading in my old job. Um, there we go. There we go. Doing some covering. All right. Finally. Take the last one back at a quarter. So I wasn't a trader per se. Yeah, I'm a trader, but I'm called an executing trader or a liquidating trader. This is retail trading. It's a completely different business. And psychologically, you have to understand that it's a different business. If you don't, it's ruinous. What I used to do in the old days, I hope I'm pronouncing your name right, Kunj, right? What I used to do in the old days, what I used to sell stock, I would sell millions and millions, tens of millions, hundreds of millions of shares of stock for people like those people who did the, you know, Mogo and those kind of deals, right? So if the stock traded $100 million in a day, my clients better have at least $30 million in cash. So I'm liquidating, right? I'm working the market to sell as much stock as I can to you guys. Retail trading is a completely different business. Retail trading is when you have a trade set up, you have all of that discipline, money management, risk management, all of that stuff. The old job was completely different. I work with the market makers, they show me buy orders, I pay them to show me buy orders. Right? Market makers pay brokerage firms for the order flow. I pay the market maker to show me buy orders so I can liquidate my clients' positions. Does that make sense? It's a completely different business and a different level of skill, different type of skill. So I'm flat on that short. So the first short I took was here. Let me just go through the scalps I did this morning. The first short I did was here. And then I got stopped out. And then, of course, it worked. So then I waited till here, and then I took it again just here. Right? And I had my bids. My stops were right at the top right there. Right? So this one scratched. This one finally worked. I always cover a little early. I always sell a little early. Right? I like to front run other traders and take my profits. Just get out of the way. Let's see if 79 works as a level. I'm testing these balance levels this morning. Let's see if the offers lift at 79. So, and London did, as usual, corrected inventory lower. Right? That's kind of more normal price action. So if London had corrected inventory higher, it would tell me, oh, somebody's really trapped short. But because London corrected inventory lower, that's normal market action. Do you guys understand what I'm saying? Because London usually likes to correct inventory lower. If it doesn't, that means the shorts are really heavily bid because someone's really trapped, like there's some size. So now you know that the market's not as trapped as you think it is, right? So it's okay to short. So if you're going long, then you're a bit more cautious too, right? If you know that somebody's really trapped short, if you know the market's really, really trapped short, you can go long and be a little bit more confident, right? So say you bought 79 and a half, 80, right? You're looking for sellers at 81 and a quarter, and then if you get past 81 and a quarter, you'll probably want to be looking for 82 as an out. Exactly, Aaron. And the position is underneath us, right? So that was a nice little backfill that we shorted when London opened. Right? And this is what I teach in the room and what I teach in the private mentoring when we do one-on-one sessions. Watch the offers lift. See, they saw buyers over 81 and a half. They saw them lined up. They moved the offer up to take advantage of that. So that's what we teach at the Trading Syndicate. Come give us a visit. It's 50 cents a day. There's a code that you can use to get 25% off. Try it out for a month. If you don't like it, there's no obligation. But I promise you, you'll learn more practical market information that you can actually use to make money than you will anywhere else. Other trading rooms will pontificate and they'll teach you a bunch of fancy stuff, but you won't be able to trade your way out of a wet paper bag with the information they give you, to be honest, right? And it's going to take you years to even figure out what they're saying. We'll give you practical. This is where you buy, why? This is where you put your stop, why? And this is where you should be selling, right? It's got to be practical. The trades have to make sense. And anybody who's teaching you to trade, ask them what the business reason for the trade is. If they can't explain the business reason for the trade, run away. Right? If they spout something like, "Oh, it's random," or "I can't explain it because it's too complex," it's got to be simple. And if you do join, see, I said 82 was the next target. We actually did one better. Almost went to 80. We went 82 and three quarter. Now they'll sell into it again. So after a while, after you watch these markets, you'll actually know, like, okay, if I buy 79.80, right? I know by 82, I know there's going to be some selling at 81, and if it gets over 81, I want to be out of this trade by 82. Otherwise, it's going to come back down, as it is right now. Do you understand why you sell into strength? And now I think we're looking to try and move that point of control from 76.5 up to the 80s. No, 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 no. That's what I used to think, Aaron. What the point of control shifting means to me, and it took me years to figure this out in a simple way. And this is my problem with market profile. This is what they should tell you. This is where the position is. If the point of control moves up to here, it means that there's good buying. That's good distribution. Okay? That's all it means. That we've taken this inventory and we've sold it up here. After the point of control moves up, I'll usually look for a move back down because then they have to put it on sale. But that's not a hard and fast rule. I don't use it actually to trade. It's just curious to see how good the distribution is at the time I'm looking at? Do we have enough customers to move that point of control higher? Does that make sense? It's very hard to actually use the POC shift in a trade setup. That's why for my trading I use, and it took me a long time to figure this out, use the candles to actually execute the trade. Use the market profile for four things: poor high, poor low, where's the inventory, single prints. Exactly. And if they run out of buyers, they'll sell it back down to where they are positioned, where they paid for it, where they bought it, their cost basis, right? So that's the practical use of market profile. There's a lot talked about and written about in market profile that's actually not going to help you at all make money. And I used to trade solely market profile until around 2016, 2017, when the ranges started getting really big. And then I found I had to figure out how to use the candles in a practical way. That took some time. It took some time. You'll notice I never talk about charts, chart patterns, right? I've got VWAP on there, but we're way above it right now. All I care about is where the sellers are and where they stop selling, right? Where they initiate selling, that's where you short. Where they stop selling, that's where you cover. Or that's where you go long, and when they initiate selling, that's where you get out. It's very sort of, I call it blue collar trading. It's very simple. It's very make your money and get out, right? I'm a big believer in taking profits. I know yeah, I know it's beautiful to like hold trades for 30, 40 points, but listen, if you can make 3 to 5 points on 3 to 8 contracts on the E-mini, you can pay your bills. I mean, unless your bills are really high, right? Then you do have to do that trade a couple of times a day. And I'm a firm believer that retail should take profits instead of trying to hold trades longer. It's different if you work on a prop desk or if you're trying to make a career out of trading and you want to hold trades longer and show your P&L to people so you can get, a job or something like that. Or if you're trading just for a living and you have the resources. But if you're just a regular person who has a normal job and you want to make some extra income, I'm a firm believer that you should try and make your daily amount of money and then get the hell away from the computer before you lose it all. The longer you stay in front of the computer after you've made a profit, the more likely you are to give it back because your ego is going to start playing tricks with your head and telling you that you're Paul Tudor Jones because you made 300 bucks. Take the 300 bucks and get the hell out of the get out of there, right? Because if you make $300 a day, there's 20 trading days in a month. That's an extra $6,000 in income. How many retail traders consistently make $5,000, $6,000 a month? Probably less than 1%. As you gain experience, you can increase your earnings. But the biggest mistake, everyone does it, and I'm not immune, is you make a couple of $100 and you think, oh, I can make 3 grand now. And next thing you know, your $300 is gone and now you're down 200. And then you try and dig yourself out of being down 200 and next thing you're down 500. Right? And then you're in trouble because then your brain starts playing tricks on you and people start doing all sorts of crazy things because they have no discipline, right? Because they don't realize it's a business and you need discipline in business, right? That's when they start talking about trading psychology. Now I'm sitting on Dr. Phil's couch telling him all my problems when your problem is you have no frickin' discipline, right? You have to exercise discipline in business. Take your money and go. As you gain experience, you'll make more. But you can't expect to make 5 grand a day when you don't know what you're doing. You have to learn, right? And the other thing, the biggest thing I'll tell you folks is, as a retail trader, do not try and grow your account. If you make money every week, get it the hell out of your account before your ego gets its hands on it. Never leave large amounts of money in a brokerage account, right? Make your money and take it out every week. Brokerage accounts are meant to wire money out of, not into. I have never wired money into a brokerage account other than retail futures trading to fund the account. All right, let's see if we can get back down. See, now we're putting it on sale, Aaron. We haven't had time to move that POC up yet. Why do you take your money out of your account, John? I want you to think practically, John. If you go to work every week, do you not take your paycheck home every week, like say you got paid it every Friday? You wouldn't tell your employer to hang on to it, right? You're going to try to trade larger size, right? You have to exercise discipline. As soon as you make money in a brokerage account, get it the hell out of the account. Never leave it in there. Sizing up takes skill. That skill has to be acquired over time. You're not going to size up after 2 weeks of profitability and next thing be making 100 grand a month. That's just not going to happen. It is completely ridiculous to even think like that. It's not realistic at all. Right? How many people even make $1,000 a month trading retail? How many people consistently make $1,000 a month? Not many. It's one thing learning how to make money, but you also have to learn how to keep it. It's no good making money and then losing it all, and then making money and then losing it all. It creates bad problems for you emotionally and psychologically, right? And then you get into this bad discipline of a roller coaster ride, right? And then you start using all these stupid words like FOMO and tilt and revenge trading, which are all just excuses for having no discipline. Right? You got to have discipline. Sorry to sound preachy, but hey, nobody else is going to tell you the hard truth. Right? If you worked in the business, we wouldn't sugarcoat it because any one idiot can take down a brokerage firm. So everybody knows that risk management is the most important thing. Right? You can't do business if the firm's bankrupt. Right? It's pretty hard. Just got to be a little shrewd, John. Right? There we go. Coming back down. See, where the inventory is priced is here. Well, that's the thing, Aaron. Let's see if we can get down to that point of control. Now here's where market profile helps. And if you don't have profile, you can use a half-hour chart. Do you see here, this area here where E, F, H, I, there's about 2 hours, because these are half-hour bars, there's about 2 hours of stops here. What does that mean? That means over the last 2 hours, everyone who was long put their stop in this area. So if we take out 75, we'll get some liquidation down to 70. Right? At this time, I think it's just going to futz around here in this area back and forth and chop. They still have buyers coming in because people are trapped short under 75. They're front running that. That's why we're doing another look below and fail of 79. Notice how the market slowed down as soon as we got back down to that cost basis? That's because that's where 70% of their cost basis is priced of the overnight inventory. Yeah, there's nothing wrong with making 400 a day, right? Right? I think that's brilliant. I think that's beautiful, right? Just keep it, right? I don't trade with funded accounts, so I don't know how to trade multiple funded accounts with the connection and all that. But if you can do it, I think it's beautiful. I haven't seen anybody do it consistently, right? Out of maybe 1,000 people in my mentoring class, I'd say most of my mentoring class people don't run multiple funded accounts, maybe two or three, right? And they're working their way up to the tens. I mean, I have a guy who trades his own money, and he trades about $2-3 million because he's a retired businessman who just sold his business, and he's averaging $5,000 a day, right? Since he started working with me in November, right? And his biggest drawdown has been $1,500, right? So I know my methods work. I also use my own methods to pay my bills. If you're making 400 a day, that's beautiful, right? That's $8,000 a month. The question is, one, are you actually accessing that money every month? Are you taking money out? Is that $8,000 a month? Is it hitting your bank account every month? Because if it's not even worth talking about. But if you are withdrawing $8,000 a month from funded accounts, I think that's amazing. There's no point in making the money unless you can get it into your bank account. Oh, look, point of control moved up, Aaron. Right? Good distribution. So it's creeping higher, John. That means the sellers are seeing buyers. And they're slowly raising price to take advantage of it. Like you hear a lot of traders making, a lot of money every day, but is that money actually getting into their bank account? That's all that matters. Nothing else matters. Is it in your account at the end of the month? Right? And if it is, mission accomplished. I think that's wonderful. So look up below and fail 79. Say you're long 80, stop at 79, sell some here at 82 and a half. Your next sellers are going to be at 83 and a quarter. Right? So the trades that we like, that we call A plus setups, are these. So you're long, you got a place to put your stop, there's a business reason to do the trade. Why the business reason? Because the sell orders that take the trade under a level or to a level are now done. Those are complete. Right? Nothing for sale under 79. You buy 79.5, 80. You put your stop under 79 and you sell into this strength. Look below and fail. Right? It's based on very simple business. The sell orders that take the market to this level are now finished. How do you know? Because the market doesn't take the level out or looks below it and comes back up. It's a very simple trade. Learn it on a 1-minute chart. You can do this on a daily. You can do it on a weekly as a position trader. The trade is scalable in time and size. And that's what you want. You want trades that can grow with your level of skill. Does that make sense? And that's what we teach at the Trading Syndicate, right? We teach you how to trade with repeatable, scalable trades that will grow as you grow your skill. Pretty simple. And if the trade doesn't make sense, it's not as slow as yesterday, Moran. Thank goodness for that. Right? If the trade doesn't make sense, don't take the trade. Right? Somebody comes to you with a whacked out business idea, you're not going to write them a check. Think like that. And that's it for me, folks. Thanks so much for joining us. We will see you at 9 o'clock Eastern Time. Please visit us at the Trading Syndicate and like and subscribe to the channel. I appreciate it. Keeps the algos well fed. Got to keep the algorithms well fed, right? Thanks, folks. Have a wonderful morning. If you have any questions, DM me. I'm JJ, vwaptrader1 on X. And yeah, if you join our Discord, please drop me a note and say hi. And if you're having any troubles, just reach out. Thanks, everyone. Trade safe. See you in a bit. Bye for now.